What's going on with y'all? You're gonna see in the background this is a trade I took at 850 macro. So I took this trade pre-New York, trying to get the day early, get it done, finish early, and this is a trade I took. Again, you already talked about in the videos. I talked about in so many videos. I'm not trying to have a lot of strategy videos on the channel. I just want to have a lot more psychology videos. But again, I think it is good to show the strategy of what I trade. But then after that, like I said, I don't want that to be the main focus. Main focus should be you bearing yourself psychology wise and then following a strategy that only fits you, that best fits you, and stuff like that. So let's talk about it. Let's break it down and let's get into it. So as you can clearly see, we was going for a buy for today. With that being said, I'm going to clear this off so you can see it. So I have two different screens. So I have a 5-minute chart open and the 15. Well, let me go to it. A 15-second chart open. Go back to here. 15-second chart open. Now, what you can see from here is what I like to do is go from internal to internal. So let's just go from the high time frame, and then I'm going to show you this is why I took this one trade and what it is looking like. So real quick, let's go to the 15-minute because it starts with the high time frame. 15-minute. At that point, we was bouncing out of this 15-minute fair gap, right? This is a big 15-minute fair gap. You can, I'm sure I think it's just a 1 hour or 15 minute. So that's number one. Well, I want us to be following in a 15-minute or some high time frame to tell me what are we bullish or bearish. So after I got that, we literally come up, shoot up, market shift all stuff, all the way up, and then we start drop back down. We are then now into a 15-minute fair gap. This is huge because if I'm bullish on a higher time frame, only lower time frame, I only want to take going in the same direction. I do not like trend or counter trend trading. Whoever, I want to go. If we go bullish on the high time frame, I want to go and align that to the lower time frame. 15-minute, we're bullish. We pop down into a 15-minute fair gap, we are bullish. We go down to the 5-minute. You can clearly see that when we start coming down into this 5-minute, we start then making some structure, and then we start market shifting back up. This is perfect for me to get in. The biggest thing that I'm starting to do, like I said, I've been doing this, but I looked at it last week and I want to continue doing it, is this will be considered external, right? This is external liquidity. If I was to right here, I got a buy side. This would be called external liquidity because we're going for an external range. This right here, everything in here, it would be considered internal liquidity because this is internal buy side liquidity. So basically, this is the liquidity to get up here, meaning these are the structure or the structure inside this internal. So external, excuse me. So if this is external, then this is the internal range of liquidity that we can aim for. This is where I'm starting to really focus on and really lock in. If I'm bullish, that means I'm going for quote unquote. I think the trade can eventually get to here. I'm not even wanting it to get here. I'm literally going to aim for internal liquidity on its way up here. So either way, majority of times, not every single time, right? Not every single trade, you still got your losses and stuff like that. But majority of times, even if I'm wrong, I can still be right. Meaning, if the fact that we even attempting to come up here, that means if I can take partials or take profit here, that means they're giving a good exit. So you can see as we start pulling back, as we take internal, and then we start going back up, and we still haven't even met the target of the external target, but we were just at least going into that direction. We was aiming in that direction. Another thing way looking at it is to start a sell program, we always put in a high and then we take out a higher high and then we start going lower, right? Well, that being said, is that higher high we're making can be your take profit if you're bullish, right? So I hope that didn't go over my mind, but I promise that makes sense. So basically, long story short, you can be wrong and be right at the same time if you're just going for internal to internal. And that's why that's like an A+ trade for me, internal versus internal. So now that we talked about that, we're going to, like I said, I got the 5-minute chart open right here. But again, remember, I have the 5-minute chart open on a different screen. And then on this chart, literally in real time, what I usually do is have the 15-second open. So we'll go to the 15-second. Remember, this is the bullish list. All right. So let's kind of go back and just think about it. 15-minute fair gap is down here. We start showing that on the 5-minute, we start market shifting up, which will be this swing high right here. So now I'm telling myself anything up in here, I'm just looking to see how we're respecting it. Do we start respecting XYZ? We start respecting it here, coming down, and then we had this big impulse of around 840, 842. This big impulse candle that just starts shooting back up. that's perfect. That means we're going to that draw liquidity, which is really that buy side liquidity. But I'm telling you that I'm just going for internal, and then I'm cool with that. I'm cool with internal. That is why I have the 15 seconds so I can see all this price action. Remember, I can see on the 5 minute that we just closed this candle. So a 5 minute at 8:45, you can see this dot right there, 8:45. We just closed on the 5 minute candle, right? We just closed on the 5 minute candle. So at 8:45, I know that we just closed on the 8:50 candle. So let me back up on the 5 minute in real time. This is that candle that I know we just closed. This candle just closed for sure. Like on real time, I can't. This is what I'm seeing in real time. Hope this makes sense. In real time, that's what I see, because this is 8:45 candle, right? So 8:45 to 8:50. Oh, excuse me. Sorry, my bad. My fault. Right here. Boom. 8:45. 8:45. There you go. So in real time, hope this makes sense. I'm trying to make it where you can see it. 8:45. That is the candle I can see. Oh, excuse me. 8:50. That's the candle I can see. That candle has been printed. That means I can literally see this. So then once I see this candle be printed, right? I'm going down to the 15 second. Boom. 15 second. Right? The 8:45 candle has been printed. Find it right here. Right, that 8:40. Remember, 8:45. That candle has been printed. So, like I said, in between is being printed. Right, as it's being printed, I can see it being printed. I'm looking for pools of liquidity that I can start targeting, which is this. Right now, it's just going back to ICT, going back to looking at some structure of what you like to see in a chart. So basically, what I did was I saw it sweep this low right here, start market shifting back up. I took in one buy like right there, and I put my stop loss like literally right here, and it said, well, I want this swing low to hold. If this is again, remember the 5 minute candle is closing bullish. So as it's holding and closing bullish, I see another opportunity to put another contract on, which is above this order block right there. When we came back above here, expected this fair value gap on the 15 second, came back above this order block, boom. Entry was another one, and I put another contract right there. When we put on another contract, I then move my stop loss to this swing low. This swing low, I don't want to be broken through, because remember, we're closing on the 5 minute and a bullish momentum. We're going for this target right there. I also think we at some point go for this. So you see why I'm aligning all these things all together to at least, quote unquote, give myself a high probability chance, at least in my brain is thinking. So as we're closing up here, I'm literally like, okay, I'm literally moving the stop loss up. Literally, when we came back down here, and this order block right there, when it came back to that order block, literally I had my stop loss, or at this point I was at break even. Or maybe I had my stop loss literally right there, because I didn't want this order block to get trade back through there. I didn't want the order block get trade back through there. So I think my fill ended up being somewhere like here. I actually am mistaken, somewhere up in here. And then once we came back down here again, same exact thing. I'm putting my stop loss literally, or break even point at some point literally up in here, because I'm literally trying to hold this order block right on the 1 minute, or excuse me, on 1 minute, on 15 second, as the 5 minute candles are closing bullish. And that's the most important part. I wanted to close bullish, and that makes, if we are closing bullish, that means we should be respecting on the 15 second all these P arrays, right? We shouldn't be wicking. If we closing bullish on the 5 minute, that means, and technically what I'm trying to say is, if we're closing on bullish on the 5 minute, then we should not come back down here, because that means, when you think about it, that means it's very, very unlikely we close bullish on the 5 minute candle, meaning we're not, in my opinion, going for this liquidity, So instead of waiting or having a big stop loss, in my opinion, I have it like this, where I have a little tight stop loss, and telling myself, like, if we came down here anyways, we probably won't go up to this buy side or this internal liquidity anyways. So go ahead and take me out of the trade, because I don't want to be in the trade, because we're not going to the pool of liquidity that I'm aiming for. So again, came back down one more time, like I said, I break even at that point, and then we start market shifting back up above these order blocks again on the 15 second order block, came back down, touched it one more time, and then you can see literally above that high as we take in this internal liquidity when you think about it. We took this internal liquidity, and then like I said, this was like either this or this right here was the final TP right there, and I ended up closing the trade right there, somewhere up in this area right there, and that was it. But that is quite literally all I do, or I want to do, internal for internal. So we went from internal, right? This is internal liquidity, 15-minute. You can see literally how this is internal. We can't, because we're inside a 15-minute fair value gap. This has to be internal. This is internal. And then on our way from internal, we're going from the bullish on the high time frame. We're bullish. We're going to target internal, right? I'm not targeting external. I'm targeting internal liquidity. You could target this, like I said, I think I was just really close to that one. You could, this would have been a good liquidity, and this would be a good liquidity. This right now is, in my opinion, this is getting external. You're getting into the external range. Nothing wrong with it. It's just like I said, sometimes we will form liquidity right before we take external liquidity, and then since we form the liquidity, then you can literally see us nosedive all the way back down to then go back up and get this. And this would be another. This, in my opinion, now this is turning to more internal liquidity. So in my opinion, this buy right here, this buy right here, targeting this would have been great. Then you can see we matched the high, come back down. You see what I'm saying? You see how we just keep going from internal, and then we come back and then retrace. That is why I'm trying to do is capitalize before we retrace. Again, sometimes we blow right through internal liquidity and go straight to external liquidity. That's great. That's fantastic. But me, at least for these last 2-3 months, I've been seeing that we haven't really been following through a lot. So if we're not following through, then that means I'm just going to go for internal to internal. And that way I can be done and I don't have to worry about it going to external all the time. Like maybe I'll leave a runner or something like that. But right now, just kind of just getting those base hits. But again, that's why I kind of, it's just like I said, that's the strategy. It's nothing. I feel like it's not really complicated because I'm waiting for a 5-minute candle closure into the direction, and then literally I'm just going to the 15-second, and then finding Peter rays that support the price. It should continue to go up in that direction, up or down. It depends on what I'm on the high time frame. But that's literally it, and that's why I don't like talking about strategy videos, because it's like some people that's gonna be great to and be amazing and amazing advice, and then some people that's gonna be maybe that's not, maybe they don't want to go to the 15-second, maybe they don't want a small stop loss, maybe they want a bigger stop loss. You know what I'm saying? To each their own, right? It's just, I think, but I will say the risk factor and all of this is what's important, right? The risk factor and all that good stuff is really what's going to help you take to the next level, other than instead of strategy. But I just want to have it on the channel that way, kind of see it, kind of view it, and go from there. So yeah, I don't want to make this video too long, but I will see you in the next one. I hope that gave you some value, and yeah, I'll see you in the next one.